Good morning. Welcome to the Brew. I'm Lex, your host. Today we are talking to Sandra Stone of Trading Made Simple. Guess what the topic is? One of my favorites, near and dear to my heart, Gamma and Jex. We're going to break it down today with Sandra. Wait till you hear all this stuff. It's going to be awesome. Let's get to the opening bell and get into it. Oh my God. I'm once again outnumbered by the ladies. This is awesome. How are you, Sandra?
I'm good. How are you doing, Lex?
I'm doing great. Thanks. Thanks for coming on. This is a great topic, by the way. And you didn't know that this was my background. So we talked about this pre-show, and this is going to be fun. And Molly's going to do a lot of smiling.
I know. So explain your background, Sandra, and then explain the piece that you explained prior to the show that has a nice piece into the Gamma topic.
Well, let's see here. Where do I start? My dad was a stockbroker. I was a police officer for 30 years, and I was always doing. Yes,
Thank
I was.
You.
No.
Thanks. Wow.
And so while I was working full time, I was learning about the stock market and how to sell premium, and was doing that for 15 years. And when I retired and COVID hit, started to go online and basically teach people about selling premium, as well as all the different types of strategies that you could utilize to trade options.
And that is Trading Made Simple, which is an incredible resource. The videos that you do are just brilliant. I just have them on replay, so they're so good. Go check it out.
Do you realize? Do you realize that Sandra's my alter ego here? She's the female version of me because she said selling premium. What does that do? That's harvesting theta. Did you drink?
No drink, but you have to drink.
I got a drink.
I don't have a drink.
But no, it's great you said that. And the reason I say you're my alter ego is because I didn't learn when I was a trader on the floor how to make money until I learned how to sell premium. And it's such a fun thing most of the time.
Most of the time it is. Yeah, you got to have your
strip away
risk
like
parameters in place. But yes, it is. I mean, is it Paul Tudor Jones that said, the market only trends 15% of the time?
Right.
Well, if that's the case, what's it doing most of the time then? Just kind of going sideways and moving too slowly for those calls and puts to really make some money. So
that's interesting.
It's nice to be able to, know a couple different strategies that can help you in this sense. You can take some directional plays as well as selling some premium, and before you know it, you're earning an income.
That's awesome.
And that just equates to vacationing more, right? And
exactly.
This is what this is about, is just to make sure you can get that Mai Tai in.
Right? Yeah, that's right.
Margarita too. Right.
Sports
Taco Tuesday.
The tires. I remember one of my first purchases was sports tires for my car. I mean, I guess in the beginning, you're just doing it, to earn kind of an extra income. And then before you know it, as you strengthen your skills, it really starts to then supplement your income. And then eventually, it can create an entire salary for you. So, depending on how much discipline you have, of course, and self-control.
No, repeat and listen to that again, because that is a real thing. And especially with artificial intelligence automation coming up, this is going to be a real solution for people, and start now. And it's addicting. I mean, that kind of growth that you just spoke about, it's addicting because it's fun and there's just no end to it. It's a practice. There's no end to the learning. I mean, how far do the Greeks go? I mean, it's just endless.
That's right. That's right. Well, and now we have all the sub Greeks too, and there's going to be subs and so on and so forth. So, in my past life as a trader, we had access to the sub Greeks, but we didn't know what they were called. So it took a bunch of, more or less drunk scientists to figure out to give names to these sub Greeks, right? And say, hey, this is actually a measure that we can quantify now. And I'm talking more about, Vana and Charm, but we'll get into that later. We used to play with the computer. We just change our date and make it go forward on the weekends, right? And we'd raise and lower implied volatility to see what happened to our deltas. It was kind of fun. But now they have measures that tell you this, which is wonderful. Again, back to my drunk scientist in a room saying, "Hey, we can do this. I know it." So this gamma thing is great. How do you want to start? Should we define gamma, Sandra? What do you think? You want to go there first, and then we'll get into like how the market maker sentiment of gamma and understanding their positions.
Yeah, I teach this a lot, and I think for retail traders that don't really know what gamma injects is the way that I describe it is that the market makers are taking in everyone's trades, whether it be the institutions as well as the retail traders, and they have to hedge their positions because they make their money by the bid and ask price of the option. And so what ends up happening now is this tool is now available for retail traders to actually see where the market makers are actually hedging their positions. And with that, you can see it on, the indices like SPX, as well as all the other tickers, and including the different expiration dates. So if you're a premium seller or you're directional and you want to see where the market makers are actually hedging their positions, it gives you very solid, at the time, very solid support and resistance levels. And you don't even have to look at your chart. Imagine that.
Yeah, that's great. So so is it safe to say gamma is the rate of change of delta, right?
Oh, yes.
Okay, so that's what gamma is. What that means for the retail folks, especially the beginners, is that when a stock moves up $1, okay, they typically gear it to $1 move, right? It's going to tell you how much your delta changes. Now, if you're long gamma, right, you're going to get longer as that stock goes up and shorter as the stock goes down, right? And it's the opposite when you're short gamma. So I think, Sandra, what you're saying is that when we know what the market makers have, long or short gamma, and where it exists, we know how they're going to have to behave, because those crazy market makers like to be delta neutral. So as they move up and getting shorter, they're going to probably be buying some things to kind of get them back in line, especially if it gets too out of line. Is that safe to say?
It is.
Okay.
And just to break it down for the blondes of the world,
That's you, Mel.
if delta, if you had a car and delta would be your speed and gamma would be your acceleration. So that's the example used.
Did you just come up with that?
That's a good one.
I can't take that one. That's a great example.
I'm going to throw that in the PowerPoint going forward, Mel.
Yeah, I think that's Brian Overby on Options Guy TV. Go check him out. He does great interviews. Yeah.
Hub.tradier.com. We're always plugging things. Is it tradingmadesimple.com?
No, it's tradingmadesimple.org.
Well, you have it. So we will put that in the scroller too when it's time.
Thank you. I appreciate it.
Back to the topic. Sorry, I digress. So what can the retail folks learn from this? Do you have some specific examples, or just general examples, I guess I should say, of how this could play out and how they could use this data to get short a call spread or long a put spread or vice versa?
Absolutely.
Yeah, let's hear it.
There's a calculation, zero gamma, and zero gamma kind of to me is like point of control.
Okay.
So as I'm looking for positive, the highest positive volume level, that is resistance, and the negative volume level is really support. And then point of control is zero gamma. So if price is above zero gamma, the market's bullish. And in this reference, I'm looking at, like, let's say SPX. And then if it's below zero gamma, it's bearish. And you know where support and resistance is based on the positive and the negative of volumes. So you can identify that once we break above the point of control, we're heading towards resistance. And if we're heading, below below zero gamma, then we're heading towards support.
Okay. So when you say volume, I just want to make sure it's clear. Is that the volume on the day, or is that open interest volume?
No, it's actually the volume, the actual volume.
So when we look at SPX and you look at the volume number, that largest number you said, I want to make sure I got this.
Yes.
Is resistance. Sorry. Is that right?
The positive of volume is resistance. And then the negative highest volume is support.
Okay. Got it. And when you say negative volume, what does that mean? Is that negative selling options?
Exactly.
Okay. I'm thinking to myself, how can volume be negative? Wait a minute, what am I missing? And I just figured that out.
Yeah, yeah, exactly. I that's the way that like we use JexBot in our service, and
Okay.
so that's how they identify it. But a lot of other companies that provide this information use, as an example, the call wall and the put wall. And
Okay.
so these are just ways to help identify for the retail trader where's resistance and where is support.
Okay. I want to make sure I got this because now I'm curious. Okay. Highest positive vol. Oh, so that's long options. That's resistance. Makes sense because
Yeah.
it's going to run up to that or down to that, and they're going to be selling to the upside, buying to the downside. So they're going to put a sticker in that one. Okay, that's interesting. So do you find in this Jex paradigm, so that typically means that customers are what? Short out of the money calls, long out of the money puts? Because they're hedging. They're hedging portfolios typically. So they're buying puts to hedge portfolios, they're selling calls to offset that premium, right?
Yeah, they're
Generally.
selling puts and buying stock.
Okay. Got it. So that's interesting. Mal, I'm going to look at this on the Trade Hawk one of these days.
Oh, we should, if we have time, we should bring that up now.
Yeah. Well, that means I have to log in. Which
Oh,
I haven't
geez.
done. Which I haven't done.
And
Crazy.
then, Jex by volume, when it becomes negative, Jex by volume typically means that, money is leaving the market. And it's
Yeah.
a really nice indicator for people that are watching it and have the tools. That, to me, the way that I describe this to our members is it's like the market makers are pressing the elevator button down, because we
Right.
often talk about, when price rises in the market, it's a staircase up. But
Yep.
when we go down, it's an elevator. And so anytime you see that negative by volume, and it's typically in the billions, whenever you see that cross the zero line and it goes to the negative, buttons been pressed. And it's amazing that, we could get this data literally every 60 seconds
Yeah.
and see what's happening.
Is that
Behind the
the
scenes.
time frame that you get it? It's not real time, I'm assuming, right?
It's real time every 2 minutes that we get it in our service.
Okay. Have you ever seen a crazy, reversal of sorts? Meaning, what you thought was, a long spot, resistance spot, all of a sudden trading happened and it turns into the exact opposite. Has that ever happened?
Without, if I'm not looking at the information, yes, of course, that happens all the time. But if you're
Right.
watching that information in the service, as an example, or like jexbot.com, you
Yep.
could actually see it happening. Because
Okay.
if you're near resistance, as an example, and the market starts heading lower, and you look over at Jexbot and you see that money's leaving the market because there's negative Jex by volume, then you know what's happening.
Right.
You know the next area of support is going to be the zero gamma, and then it's going to head towards support if it breaks zero gamma and doesn't pop back up.
Right. Okay. Interesting. Wow, that's cool. What kind of option plays do you like to put on relative to this reading? I'm just going to call it a reading. I
Sure.
feel like we're reading tarot cards now. This is unbelievable. What kind of spreads or whatever that do you like to do? What kind of position do you like to put on?
But that's funny that you say tarot cards, because back in the day when retail traders got their hands on institution flow, right? We just thought that was a bag of chips, and we were like excited.
Sure.
Well, this, I think, just blows it right out of the water, because for every ticker you can see where the market makers are hedging. It's just incredible. You don't really have to watch the institutional order flow anymore. Because it's all in one. It's all encompassing right there. I don't know. That's the way that I view it. But what kind of trades do I like? I love zero DTE SPX trades, credit spreads as an example.
Yep.
It's a great way to earn income every day. We utilize Jex and Gamma for direction. So when we place our trade, we're looking at direction. And then we're also looking at support and resistance and making sure that our credit spread is at the wall, or away from the two areas of positive and negative volume. Okay.
And then is there, since you brought up zero DT, that's, by the way, the rage right now among retailers. I get a lot of questions on that as well. Do you find a particular time of day for zero DTEs to be most advantageous to get in, and conversely to exit your trade? Are there premium times that you've noticed for the 6.5 hours that we're in this trade?
Yeah, you know what we did is we kind of did this study where we just took a 20 delta, and everybody knows, premium sellers know 20 delta, that's the sweet spot. And we ended up doing this for a month and got a 74% win rate, and we basically broke even after a month.
Mm-hmm.
And so what I did was I employed some back testers to write some Python code, and we started to then study, just as a trader, all
Mm-hmm.
the variables that were of interest to us. One being, well, now that we had all the gamma data,
Mm-hmm.
we could actually find out what is the best time. And then look at that in periods, months versus weeks, etc. And then we were able to see, well, every time, price actually breaks, let's say your short strike and your long strike, what are the probabilities of success there? You
Mm-hmm.
can actually see the changes now. So even though we do use gamma and JEX to find our direction,
Mm-hmm.
we actually use like an advanced algo analysis to help us put that trade on every day. And so that gives us our stop loss and our take profit. It's usually between 9:50 in the morning
Yep.
to 11 o'clock is our best trading hour. But each week the advanced algo gives us our specific time as
Right.
well as our take profit. Currently, right now, it's
Mm-hmm.
right out of the gate in the morning for this week. I don't know when you're airing this, but it's, literally like, 9:43 as an example.
Yeah.
And then take profit is between 5 and 10 cents.
Okay.
And our risk this week is 3 times credit received.
Okay. So let me make sure I understand what that means. So if you sell this for 50 cents, 3 times 50 cents is where you're going to get out on the negative side.
Yes, but when you automate that, you have to do it 4 times because they give you the credit up front. So really, it's like 300%.
Okay,
Your
300%.
risk amount is 3 to 1.
Okay, and then you're taking. I missed that part about how much you're taking on the profit side. Sorry.
That's okay. Then we exit the trade between 5 and 10 cents. And the reason why we do that is, even though our back testing, let's say, says 5 cents, the platform doesn't get you out right away.
Right.
So we want to make sure that people are not just, holding on for dear life. It's like,
Yep.
when you get around there, make sure to take your profit.
So if you sell it for 50 cents, you're taking this off between 5 and 10 cents as of a credit. That's our debit.
Yes.
on the backside, right?
But as an example, like this morning, our credit was $1.10.
Oh, okay, good. And is that typical? Are you trying to get is there a credit that you always want to get, sort of, because
Yes,
it's great for
anything
implied volatility where it is, and we try to get about $1-ish. Is what's the number? Would you say
50 cents or over?
50 cents or over? Okay.
Yeah.
Got it.
The probabilities are better when it's 50 cents or over. They
Right.
start to reduce as the
Sure.
credit reduces.
Okay, got it. And do you use probability of profit calculations as well, or not really?
No, this is all based on back testing and just the analysis of all that back testing. And
Right.
we found that from going to, like, the probability of profit, as we talked about earlier, was only a 74% win rate.
Mhm.
Now we're at an 89% win rate. So we really have increased our win rate based on the analysis and all the variables that we test as well. It's been
Right.
kind of interesting. I've never
Yeah.
have done that before, but that prompted me when we started to do this as a group. So
Yeah.
we're doing relatively well now.
Mal, I'm just saying hi. Mal.
She said Python. I was just impressed.
Oh, you were?
Yeah,
Well, I can't code, but I hire.
Oh, okay. I was like, what can't you do?
No. I can hire a whole bunch of people. Is what I can do. I do not code.
That's good.
So what would you tell the person who, obviously, to sign up for anything you're involved in, because you have access to 80 plus, success rate, 80% plus success rate. But what would you talk to the brand new person who doesn't code, who doesn't know what algo trading is, bots, what, we've brushed on what gamma was, but what's a basic thing, maybe even review Delta a little bit, gamma's big brother. What would be something basic that they can sink their teeth into to start to apply to their trades, even just a simple covered call?
I would say that, utilizing gamma is what it could do is it could help you gain more confidence in what you're looking at on the chart.
Mhm.
So if you have indicators or you reading price action and you can recognize where support and resistance is, if you have gamma levels that can help you just be more confident about what you're reading, I think you'll become a more confident trader. I
Mhm.
think a lot of people have a lot of things on their charts and they're just not confident with it because, they're waiting for so many pieces of confluence to line up together. I think once you have a nice clean chart, you know where your support and resistance is, and then you utilize gamma, I think it just, really adds the credibility to what you're looking at.
Yeah, that's
And
interesting.
then how would you combine that with non-directional Greeks like theta and vega? Do you implement any of that and work with those?
No, I really do not.
Mhm.
No,
Okay,
this is all based on our zero DTE, right? Trade that we're referring to is all based on
great.
gamma
There's
injects as
no,
well
yeah,
as the back testing and the algo analysis.
Do
and in that context, gamma explodes over there, so it's off the charts
What do you mean?
with
What do you
zero
mean that it
TTEs.
explodes? What's that?
Well, zero TTEs. You have it's the whole Volmageddon
don't
understanding of it,
believe it, Mal.
which is probably false. But that if you're looking at a longer term, let's say a 60-day, it's more of a graduated
Oh
experience.
yes, yes,
Yeah,
yes. And I
That's
think it's one of the ingredients of the zero DTE that people get so excited about is,
Mhm.
a lot of people worry about that overnight risk or
Yeah.
the
yeah.
longer time frame risk, and I think people just recognize that they can make some money every day and
Mhm. Do you
without that overnight risk.
Yeah.
Yeah.
That's a good point. I was gonna ask that too. Do you ever put the position on at the end of day 0 for the next 0 DTE?
No, we
So
don't
you
do
get
that
gap
right
risk
now.
then.
We don't do that as a service, but I teach an 8-day SPX income generating
Okay.
trade where you're looking basically at the chart, seeing if we're trending positive. If we are, then we're taking a put credit spread or a broken wing butterfly as an example. A put butterfly a broken wing. Let me say that 20 times. Broken wing butterfly, and doing an 8-day, and you're looking to capture
Right.
70 cents to a dollar. But I think what's really gotten into is like you can make that much money in 1 0 DTE day
Sure.
versus an 8-day, and I think this is what's blowing everyone's minds right now. That's why people are so excited
Oh,
about
yeah. Yeah, I see that a lot with the retail folks at our shop. It's insane. That's the question I get right away. Zero DT stuff. Now, do you ever use the gamma metrics, let's call it, just generally, to get into the call spread? Let's say you sell the call spread because of all your reasons, and then it goes the correct way, starts heading back down, and then do you sell the put spread and get into the iron condor, or do you just leave the call spread be and take that off when it gets to 5 or 10 cents?
Right now, with the zero DTEs, we found that iron condors are not any more successful, and they don't bring in the income that the vertical does right now.
Really?
But we keep that as a variable to keep testing, so we could see it change.
Hmm.
And as an example, like one of those changes where a couple weeks ago we could have a price breach, the short strike, and still be 50%, or excuse me, 80% profitable on the trade.
Hmm.
It could breach the long strike and still have a 50-50 shot. Today, that's changed now. It's 30%. So you know that if your short strike and your long strike are breached, you only have a 30% chance of actually
Hmm.
winning that trade. And I think that
Yeah,
again gives you confidence to cut it and not
right.
hold on to it, right? Just
Right.
cut your
Uh,
losses if
I got
that's
you.
what's going to happen.
All right. I've got two more important questions, Mal. Can you handle it?
Or
All right.
do I have
Here's
to cut you off after two?
Oh, look at oh my God.
First time ever. I know
What
he gets a thumbs up. I was thinking about that earlier today. We have to figure out
when
what
I
that
do that
is.
on my thumb, the Apple machine gives me a thumbs up. I don't know how to stop it. That's crazy. Important question number one. Ready? How far do you separate the strikes, short versus long, in your call credit spread or your put credit spread, depending on the
Good question.
$5.
That's it. So it's never a $10 one, never a $15 one, never 20.
No, we did
It's
that.
five.
No, we've only done we've done the back testing for
Mhm.
the $10. I think what we decided on is because a lot of people want to minimize their risk as well as the capital that's needed to
Sure.
do these trades. So we just keep it at the $5 wide.
Okay. Okay. Perfect. Ready for important question number 2? Here we go. Important question number 2 is, how many months do you check to look at gamma? So it's the current short, the current 0DT plus the next one plus the third one plus the fourth one, or is it just the current one, or is it 60 days out, all of them? What's the answer to that one?
That's really our proprietary system that we have.
I got the proprietary part. Don't tell us then.
No
Whatever you
secret
do.
sauce. No
It took a
secret
lot of
sauce.
variables. It took a lot of variables to get here.
Okay.
And so, when people say that you back test, you kind of go down a rabbit hole. I totally agree, boy. I mean,
Yeah.
it's just crazy. So the fact that we're here at 89% now leads me to believe that we have something going on that's well.
Okay.
But because I have to hire people out on this is definitely a proprietary system now.
Okay, Molly, it's behind the paywall. You can't know that answer.
Right.
Hey, but come join us every Friday. We give our trades out for free. We do a live stream 2 hours in the morning, and you could come learn about it and check it out.
Awesome. Very
Okay,
good.
I have one more question. You know me.
All
So
right,
talk
CT.
about both of you talk about Gamma and GameStop, since you are alter egos of each other.
Wow.
I'll let you start, Lex.
You want me to start?
Sure.
Well, that's a long answer, Mal. We got to do a quick version of this because we're running out of time. Okay, so it needed a catalyst. What was the catalyst? What's that guy's name? Roaring Kitty. So he started the ball over the top of the mountain, snowball. He started buying calls, just boom, 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 boom. Not a hugely liquid stock. So there was not a lot of open interest. So the market maker community selling these things and buying their stock and hedging and doing what they can do. And then
high short interest though to begin with.
Yeah, there's a lot of he did notice that too. So he did a study and found that there's a lot of short interest.
Yeah.
That's the institutional player, right? All those hedge funds. So all of a sudden the stock starts moving up. A little bit of gamma squeeze on the market maker side. And then the institutional said, wait a minute, I'm starting to lose money and I have to buy this in because I'm getting a margin call. So then they start pushing it a little bit by buying, some of their short shares in. And then the community got bigger, right? His community, if you saw that movie Dumb Money, man, all of a sudden everyone's in. And they had all kinds of examples. So it just kept snowballing. And then implied volatility started raising itself. So now short calls that these market makers are holding against long stock, implied volatility is working its way up and they're getting shorter deltas. So they're buying more stock to cover that. It's Vana. That's happening there. Selling more calls, more gamma, more Vana, and it just keeps grinding and grinding. And institutionals keep buying and buying. And all of a sudden, before you know it, it went from $17, I think, to $500 in, I want to say 10 days is what happened there.
Yeah, it's crazy.
Right. And then we talked pre-show, Sandra, about, maybe the regulators stepped in and kind of stopped the gamma squeeze and put the brakes on. Who knows? All I can tell you is that
that's exactly what happened.
the market making community didn't want to stop. Trust me. When you're buying options that are 800 strike and the stock's trading 500 for $12 with 2 days ago, I want to sell as many as I can. So I want to be on the other side of those. But anyway,
so that's really important. Yeah. I was just going to say that was a really important point, Lex, that you don't see on any of the documentaries, on any of the movies. You are a market maker. You were in the same position as Citadel at that point. And so you really understand the operations. And so that was a bit of a misconception on the incentives there. Now, whether its ties are to the overall banking cartel, who knows? I mean, that might be another show. Let us know if we're going to talk about that.
That's good CT for you, Mal. That was good.
Yeah.
Sandra, you're going to say something? Sorry.
Yeah.
No, I was just going to say, a lot of people, really don't know that a gamma squeeze has nothing to do with the environment of that stock or, the environment of the stock market, actually.
Mm-hmm.
And that a gamma squeeze is just it's a mechanism, this phenomena that happens when all these forces, start, kind of going against each other, and we have this big imbalance. And
Right.
I think that the first thing that started that big imbalance was the short interest, the high short interest in that stock.
Yep. Yep.
And, a lot of people think, oh, well, that means that, GameStop at the time was it was bullish. People were actually, really thinking that this stock was going to do well. And it has nothing to do with that at all.
Right. Right. Yeah. They nailed a couple other stocks too, but don't forget, my feeling is that the Roaring Kitty guy, he took risk. I mean, he bought calls, he bought stock, he did everything. He wanted to be long. He had an opinion. He put his money where his mouth was, and everyone joined in. God bless him. He got lucky there. That there's an impetus behind his initial thought.
Yeah, his story is incredible.
He could have lost. I mean, he just didn't. Yeah. Right? He certainly
his story. It really is incredible. It's an incredible story, and I think he made millions or billions. I'm not sure.
He made in the movie, he was up 47 million at one point, and he ended up getting out for 34 million, all said and done. Which, is insane for a guy in his pajamas in his mom's basement. I mean, it's hilarious. That sounds like me. That's what I did during COVID. Right. Oh my God.
I may or may not be wearing slippers right now. I may or may not be.
Just saying.
I think I am.
All right. Well, good, Sandra. Thanks for coming on. This was awesome.
Yeah, this was a fun talk, guys. I love meeting other geeks like me. So that's great.
This is terrific. This is really important stuff, and I'm glad you're looking at this and studying this and actually using it, with your company, and that's awesome.
And so for the people watching, we're getting a lot of thumbs up to bring you back on again. So we hope you'll come join us again.
Absolutely, anytime.
Okay. Okay, great.
All right. Well, thanks for coming on, Sandra. Thank you. Mal, anything else before I hit this dumbbell?
I have so many questions. I will save them for the next time with Sandra.
Oh, good. And that means she's got to come back.
Check out tradingmadesimple.org.
Right.
And go check out her Friday stock reveals that she gives away for free.
I'm gonna make it so that I'm gonna come out and visit you two ladies where you are on the West Coast, and we're gonna do a talk together.
Okay, great. And by the way, when Lex visits, Lex goes all out. So anytime Lex visits, you do not want to miss that. It's just fun.
Really.
I'm a good diner outer too, right?
Nice.
Awesome. All right. Well, good. Thanks for coming on, Sandra. And
thank you, guys.
I think that's it, right, Mal?
Thanks, everyone.
Say goodbye to Sandra.
All right. Bye, Sandra.
All right. Bye now.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be a financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.